Welcome back. You are tuned in to Traders Nation. My pleasure to have with us for the first time Peter Reznicek, Chief Equity Strategist with ShadowTrader.net. Peter, welcome to Traders Nation. How are you today?
How are you, Kurt?
Good, good. Thanks for being with us, Peter. Hey, Peter, give us a brief overview of ShadowTrader.net. What do you guys do over there?
Yeah, definitely. Kurt, we're an advisory firm. We've got two newsletters, Shadow Trader Pro Swing Trader and Shadow Trader Pro FX Trader. Nice. Where basically we apply a very technical approach to swing trading, both with stocks and currencies. We also run a daily broadcast called the Shadow Trader Squawk Box,
nice.
Which is live on the Thinkorswim platform as well.
Sure, sure. All right, good. Now, Peter, the newsletters, briefly, how do they work? Is it a free newsletter? Is it a subscription newsletter? And what do you cover on that?
Okay, subscription-based, really reasonable, $20 a month for each one.
Nice.
And very, very dynamic in terms of trading. We really pride ourselves on pure transparency, meaning that everything we do is live via email alert in real time. If we're buying, we tell you we're buying. If we're moving a stop, we tell you we're selling. Everything's in real time via email.
All right, good enough. All right, and then within the newsletters, what do you have? Commentary, charts, what?
Yeah, most definitely, most definitely. In addition to the plays that we send out live via email, there's also stock trading ideas each night, about 2 to 5, which we call bulls and bears. That's kind of like the do-it-yourself section.
Sure.
And then, yes, there's also a very comprehensive commentary, charts, things that are setting up in the broad market sector-wise. You also get a full report on whoever's putting out earnings that day, all your market internal data in terms of breadth, AD lines, all that type of stuff from the day before. Everything's listed there.
Now, Peter, do you host a Squawk Box segment yourself? Do you do that?
I don't anymore, Kurt. I used to. I actually started that product a few years ago, and I stepped back from the mic. We have a gentleman named Brad Agunis who is running it now for us.
Nice. And what do subscribers do? They come in and they can listen to trades being done all day long?
Exactly, exactly. And that's actually free. If you're with Thinkorswim, it's actually embedded into their platform. We don't charge for the Squawk Box.
Oh, very good. All right. And we'll bring up all that information towards the end of this segment too, folks,
sure.
By the way, just in case somebody missed it. All right, so now, Peter, as a trader, briefly describe your trading style, and especially in today's market as it is. It's up, it's down, and right now we're seeing it's very bullish. What are your trading strategies, Peter?
Definitely very, very technical. Obviously, as I was saying before, we're not fundamentalists. We're strictly chartists, all technical.
Yeah.
We generally exploit a time frame that's more short-term. Our specialty is kind of like a 2 to 5 day swing trading style.
Okay.
And then for certain stocks, if we really like the chart setup, we'll take it a little bit longer, maybe as far as like 2-3 weeks or so.
Sure. Sure, as long as the stock continues to have momentum, right?
Of course, and of course, relative strength, Kurt. That's my main thing. If that stock has to stay stronger, or at least as strong as the market itself, that's really the most important thing.
Peter, any tools that you use to scan the markets, and if so, when do you scan them? Scan them nightly for new movers? Keep a list of or several lists of stocks that are continuously on the move. What?
Yeah, I have a universe, Kurt, that's about, I'd say, 850 stocks. I really like to play in the pond of like $20 and up, 500,000 shares a day. So right now that's about 850 stocks out there. And I do scan them, I wouldn't say every night, I'd say about 3 nights a week, and then on the weekends, definitely. I'll probably go through the list twice on the weekends. I'll look at their bars on the weeklies and on the dailies on Saturday.
What are you looking for when you're trading, when you're looking for stocks and new stocks, for instance, that's not on your list? What kind of movement are you looking for?
I think it all comes down to the relative strength, like I was saying. That's really the thing that catches my eye the most. What I like to do best, Kurt, is I like to have a really good idea what the broad market is doing, and I have a picture in my mind always of what the S&P and the Dow and the NASDAQ charts look like, right? And I just keep that picture in my mind, and as I'm flipping through these 850 stocks, I want to see what the patterns of those stocks are, and then I kind of check them against the pattern of the broad market. So I immediately know in my mind, wow, this is a lot stronger than the market. It's real easy if the market's been down 3 days and you're going through your stocks and you see this stock that's just been sitting there rock solid as the S&P crashed for 3 days, and that stock maybe made 3 small bars, 3 dojis just kind of lining up.
Sure.
This is really strong.
All right. So what do? You set yourself a set of perimeters, of variables, if you will, of certain things that you're looking for when you're looking for a stock, if it's going to make your list, but not necessarily something that would be in industry, unless of course, let's say oil's on the move. Would you be looking into the oil area for those perimeters, or are you just going to, whatever it takes, I'm going to pull it in no matter what industry it's in?
Yeah, I would say I really don't discriminate on the industry. Obviously, you want to be in the direction of the sector, as you were saying. Like, let's say you've got crude oil coming into a strong, support area, and it's been down a number of days or whatever, and you might be looking at some chart patterns on oil stocks, and they might actually be looking kind of bearish, and you might be looking for a short. But you have to always be very careful to not get too caught up in just what's right in front of you.
Yeah.
Pull out to the bigger picture and realize, okay, wait a minute, if crude's coming into support, no matter how bearish these refiners look, they're probably not going down, So yeah, definitely, you got to keep that in mind.
All right, so we talked about this swing trading, 3 days or maybe 5 days longer. What if something gives up a lot quicker than that, you're going to be out, right?
Oh yeah, definitely. I mean, everything is always with defined stop, always.
Sure. All right. Now, favorite markets to trade? Where are you at? Are you on NASDAQ? You on Amex? You on NYSE? You all over the place? Where? FX?
I see a NASDAQ. Like I said, I like to stay $20 and higher and bigger volume, so that's mostly where you're going to find those stocks.
Sure. Let's talk about volume. Of course, liquidity can be a big issue. It's easy to buy stocks, sometimes very difficult to get out. Where do you set your daily volume as far as a stock is concerned? A million shares, 10 million shares, 5 million shares, where?
About 500, about 500,000.
500,000? That's still the norm then, okay?
Yeah, it's still the norm. Yeah, once you go below that, you really start to see little, I wouldn't say like gaps in the charts, but you can kind of feel it as a trader. When you start playing around with stocks that trade maybe 200,000 shares a day or whatever, and you get a little bit of size in them, you can start to see. I mean, the spreads are obviously wider. Slippage starts to occur. It's not the same,
Right. Now, on the larger, large cap stocks, and we talk about some small cap and large cap a lot too. Is it possible for the trader to buy on the bid if they sit there long enough? Yeah,
definitely. I think they could, but the thing is, Kurt, you don't want to. Me personally, I don't really want to employ that type of strategy because when you're talking about swing trading, which is a slightly longer term, and you're not day trading, you really don't want to lose a play over a couple cents. It doesn't make a whole lot of sense to say, I want to pay the bid. I don't want to pay retail. I want to get it here. When you're looking to try to make a move that's $1.50, you don't want to let that $1.50 go just because you were trying to get 2 extra cents.
All right, so trying to squeeze, and my point is trying to squeeze the market maker doesn't always pay. In fact, it can work against you.
I think so. And it's definitely, when you're talking about swing trading, definitely. And even with day trading, you have to really understand what type of stock you're trading. If it's something that's, in the $10, $15 range and just does gigantic volume and, really may only move, say, a total of 15 cents on the day, well, then, of course, that's where you want to be. You want to be buying on the bid and trying to flip out a few cents higher. But if you've got a time frame of a few days, and you're looking to make multiple dollars or whatever, you're just not going to do that.
Peter, where are you setting yourself up? You setting yourself up as for the bigger moves, looking for charts, or for incremental moves?
I would say a little of both. Like I said, I mean, our forte is really the swing type of positions that play out in like 2 to 5 days. But even those positions where we might just be taking one leg out of it, a small bite, you have to understand that's usually setting up in the context of a bigger move. So what we try to teach our subscribers often is, when we exit a trade, we usually just exit out partial, and then we let the market take us out on the other half. You know what I'm saying? So we'll get out at the profit that we want in a few days, where we think the first target is, and then we'll just trail a stop and let the market take us out of the rest. That way, if the play, if it is part of a much bigger move, we can at least participate a little bit.
Yeah, Peter, in your opinion, how important is it for traders, even I've seen experienced traders or moderate traders, sometimes they just don't always have that exit strategy. How important is it to have that exit strategy? Would you agree that it's just as important to have that entry, to have that exit?
Kurt, I would say it's doubly as important. Honestly, it's funny because that you mentioned that, because I think you're exactly right, is that a lot of traders don't realize that the game is really in the exit. It's just as important, if not more. I always like to say anybody can buy a stock, but who can sell a stock properly? Meaning, get it off at a profit or move your stop up professionally, know when to scratch it, break even, know when to take a small loss. Right. All of these things fall under the category of the exit.
Right. Well, listen, and as I've always said this, you've got all these different variables to get out. But generally, when you're waiting for that stock to be set up, you know when to get in. It's one variable, and it screams at you. But getting out, a lot of different things can happen to take you out or keep you in. Peter, where can we find you at? Shadowtrader.net?
You got it. www.shadowtrader.net.
Head on over there today. All right, Peter Reznicek with us today. Peter, we do appreciate your time. We hope to have you back on again